Welcome everyone to your currency recap. Corey here with you for May 22nd. Let's jump into it and take a look at what's happening in the markets. So I'll start with a little bit of a market update and say not a whole lot going on there. Quiet day, sideways across all markets. So not a lot of movement, but where we've been going is that upside breakout, more of a transition from risk off to risk on over the past few weeks, and we've talked about that quite a bit. On the daily news, Euro consumer confidence down as expected. That met expectations. Japanese core orders with a big miss, down 3.9% versus the 0.5% gains that were expected. So that not great, and certainly when you're looking at machinery core orders, that is a big drawdown from what was expected. Let's take a look at a few charts because sometimes a picture speaks 1,000 words, as they say. We've talked about this cup and handle. This was the day. This was a Wednesday, I believe, because we were in the midweek, and I talked about I was buying that dip. I thought this would be kind of the bottom of the handle. Now, I didn't really expect it to come back twice, but ultimately it just kind of drew that out. Larger base creates the potential for an even bigger breakout, and I still think I'm watching for that blow off top. Watch for a sprint higher. Imagine a runner that's been running, and then they sprint for the finish line. If you see this thing turn vertical, big exhaustion highs, you know that that's kind of a ringing of the bell, and we're probably at the end of that rally. But until that time, I want to play risk on. In the midweek last week on Wednesday, we talked about the Kiwi, and the Kiwi has broken out of a long-standing downtrend, and we talked about this pullback here. This pullback to the old breakout point is your picture perfect setup. A retest of the once broken trend line is in fact what a head and shoulders bottom looks like. In essence, you've been trending lower, right? Lower highs, lower lows, each step of the way, lower highs, lower lows. And then you come down here, and instead of going lower, you create that higher low, and they call it an inverse head and shoulders. It's kind of this guy standing on his head, and you can see his shoulders. And really what it is it's a trend line here that once broken becomes retested, right? You break above, and then you come back and retest it. We break above the trend line, we come back and retest it, which creates that shoulder effect. So here's this guy standing on his head, and the perfect entry point. Sure enough, the best performing currency. So do technicals matter? Absolutely. Did this chart setup play out as expected? You bet it did. So where's the next trade? The next trade for me is the CAD. Now I've been a little bit off here, I would say, in terms of pinpointing these spots, but I think this is a pretty good one. We've got a couple of patterns within patterns. You could call this an ascending triangle. In an ascending triangle, you've stalled at a resistance point at the highs, but you're creating higher lows, and so eventually you get to the point of the moment of truth, and it should break to the upside. In addition, you can sort of see the cup and handle effect. In a cup and handle, the handle over here will usually be about 30% of the size of the cup. So whatever this size is, that's 100% of the cup, right? The handle's about 30%, and this fits that pattern. So the cup and handle, or ascending triangle, whatever you want to call it. And then last but not least, this little stall out point. See how there are two pivot highs right there, and then we broke above it. Old resistance, the old ceiling becomes the new floor. Patterns within patterns within patterns, all suggesting that an upside trade in the CAD is the next move to go. If we look at crypto, a bit of a downward trend in effect. 20 days crossed the 50 days, so you're in a bearish price pattern. We've now come up underneath them, and this is usually where you stall out and make another leg to the downside. What is crypto doing? Lower highs and lower lows, which is a downtrend in the purest form. A downtrend is downward trending, means that you're moving lower overall, which is a series of lower highs and lower lows. So the next move very easily can be a move to a lower low. And that would be my expectation. Crypto, the gold markets, we've talked about them being heavy and likely to trade lower for the past few weeks, and that has been happening. I see nothing in that to suggest it has turned. So, as we look at the rest of this week, we're still bullish short term. If we get that big blow off top, that would change things pretty dramatically. The rest of this week, Tuesday, got a lot of data out of Europe, French and German manufacturing and services PMI data. You have the RBNZ statement tomorrow afternoon. You get CPI out of the UK. You've got the Fed minutes on Wednesday. So the CPI and the Fed minutes are on Wednesday. Thursday, we get preliminary GDP in the US. And Friday, an inflation number. So quite a difference from last week where there wasn't much on the schedule, much in the way of economic news. This week we got quite a bit to digest, so there should be some decent opportunities there on those events. Markets remain in that upward trending phase until that blow off top materializes. We stay more risk on. For the rest of this week, we've got a currency recap coming out tomorrow. We've got the RBNZ. We'll be trading that live at 8:45 p.m. Mountain Time. That's 10:45 p.m. Eastern. We've got our currency midweeks, which is a class that I do every Wednesday. Come and join us. And then another recap on Thursday. Thanks for joining us here today. Hope you enjoyed the recap, and we will see you all next time. Goodbye, everyone.